blocks that have taken place as well today. Let's address one of those companies, the Inox group of companies. They have been in focus. And on Inox Wind, we have seen huge blocks taking place. More than 10% equity has changed hands. To find out who were the parties out there, Mr. Devansh Jain, the whole-time director of the company, joins us on the show. Hi, Devansh. Thanks so much for joining in on the show. Appreciate you joining in. Well, you know, close to 10% equity has changed hands. And, our research team is telling us that it's a possibility that Inox Wind Energy could have been the seller. Could you clarify who was the seller, who was the participants in today's block, the seller, and what does the promoter holding come down to?
Hi, Nigel. Thanks for having me. So IWEL, Inox Wind Energy Limited, the promoter holding company of Inox Wind, has sold its stake in IWL to both long-only domestic and FII investors. We had always maintained publicly that our larger goal is to make this entity a net debt-free entity. And I think we've ended up raising close to 800 crores today. And with this, along with the internal accruals we expect over H2, the whole company becomes net debt-free. So again, just to go back, when the sector pain started over the past 6 years, we had reached almost 2.5 to 2.7 thousand crores of debt. And we're now down to about 200 to 300 odd crores of debt, which will get off from internal accrual. So we've completely rejigged the entire balance sheet so that we are fully geared for the huge growth coming up in the sector.
Devan, just want to clarify, Inox Wind Energy held close to 50% stake in the company, right, prior to this block. Now,
that's right.
Post this block, what does the stake come down to?
So IWEL is now down to about 40.5%, and the promoters directly own close to 15% of the company. So as promoters, we own about 55% of Inox Wind now.
Got it.
Got it. And this was an 800 crore deal. And now to pare down the balance 2 to 300 crore, you don't need to do any further stake sale. It will be done via internal accruals.
Absolutely, Rima. I think, as I mentioned, over the past 6 years, we had amassed almost 2,700 crores of debt, down to the last 200, 300, which will all go away from internal accruals. There is no strategic action planned any further. That was the last of strategic actions to clean up the balance sheet.
Who were the buyers in today's transaction? Can you give some color on that? And what was the overall demand for this 800 crore block?
So I think they were very, very strong marquee names, some of the largest investors globally. Obviously, these names will be in the public domain by the evening. I can't share them at this point in time. We've got the most marquee domestic names, but I think we're particularly excited by the quality of the FIIs who've come in. They're phenomenal names, probably the largest investors globally. So yeah, I think it's only a long-only book and very, very strong demand. We've not been able to fulfill most of the demand for most people.
Oh, interesting. And the body language of yours as well is telling you that you're feeling good about this. A lot of demand coming in for your stock. Obviously, that feels good. But tell us, the promoter holding comes down from around 64% to around 55%. No further stake sale, or you still will hold majority and maybe bring it down to around 50-51%?
No, Nigel, there's no question of any further stake sale. As promoters, we barely sell stake, but we've committed Inox Wind has to become debt-free after these 6 years of pain. The only other deal we'd ever done was a very small deal in Floro, which we invested back into the wind business. We don't need any further capital in Inox Wind. We are very, very strong. The balance sheet is completely geared for the huge upcoming growth in the sector, as I said. So we don't intend to sell any further stake.
So in FY25, now that you will have no debt, what could be the annual interest savings?
Look, I mean, at one point in time, if you go back to the last financial year...
No, just say FY25 versus FY24. The interest savings.
I think we should have zero. It's going to be zero interest costs.
No, so what could it be this year? Because next year will be zero. So this year, what could be the decline in interest savings to understand the delta next year?
Look, I think we're at about 150 to 175 crore run rate at this point in time in this financial year. So naturally, that will drop to about 20, 30 crores in the full financial year, which are the banking charges, which are the normal charges on non-fund-based facilities, etc. But on the interest side, it will be zero. So almost 150 crores will get cleaned up.
Hi, this is Nimesh here. If I can ask a question?
Sure.
Okay, you spoke about some marquee names, buying in today's block deal. I know a few names, but names apart, what is exciting the larger investors to come at this level? In terms of business prospects, if you can share for the next 4 quarters how the business is going to shape up. Internationally, I believe some larger players are weakening. So, are you expecting a larger orders from the emerging markets, from Asia as well going forward?
Look, first and foremost, we're completely focused on the Indian market. I think the potential in India is unparalleled. After the past 6 years of pain, we're really down to maybe 2 or 3 strong players in the Indian market. We have the lowest break even. I mean, with this debt gone off, we frankly break even at negative sales, given our O&M subsidiary throws up more cash than our fixed costs. Having said that, I think the government is being very, very clear in terms of the targets they've set out, which is 500 gigawatts by 2030. They've announced 50 gigawatts of auctions every year, 10 gigawatts of plain vanilla wind auctions, 10 gigawatts of hybrid. The C&I market, the PSU market, the retail markets are all buzzing, booming. And I think as we move forward, you're going to see more and more order inflow, more and more execution. From our perspective, I think we have a fairly large order book, but I think in the coming weeks, over the next 2 quarters, we should be announcing multiple deals across PSUs, IPPs, C&I platforms, and the retail market.
Got that. Thank you.
Just one final question, Devansh. You said that you are bidding and you're winning deals on the private side and on the PSU side. So could you give us a mix of your portfolio right now? How much is PSU, how much is private, and how will that change going ahead?
I don't think we have any fixated target where it has to be 30% X or 40% Y. I think what's relevant for us is no single customer, ideally within a financial year, should be more than 25% of the business. And I think now that the whole sector's coming back very strongly, we're diversifying the entire order book. Presently, I think in our order book, PSUs would be about 40%, retail maybe about 15%, and the remaining 40% would be C&I and IPPs. But as I mentioned, I don't think we have any specific targets. I think what we're really gunning for is next financial year, half of our order book would be turnkey execution, and half of it would be equipment supply. That's the broad goal which we have as a company.
Okay, all right, Devansh, thanks so much for joining in. Appreciate you fielding all our questions. And I think that look on your face, the body language tells us that there is a large party that's come in there and bought that block. We'll wait for a couple of hours more. I think Nimesh as well gave us a bit of a hint, and I think we know that officially on the stock exchanges. So that's the management of Inox Wind sounding reasonably optimistic on the prospects of the business going ahead. The stock has recovered from the low point of the day. Slip into a short break. On the other side, Jay Bala is waiting for us from Cash the Chaos. He'll tell us how is he reading the technicals of the market.